Alright guys, welcome to the EURGBP pair breakdown. Okay, so we're pretty much gonna follow up from the previous EG breakdown that we did, which was, pretty much explaining this, okay, where we are essentially in a potential LPSY, right, because these are preliminary sign of weaknesses and our overall target is still liquidity here, right? But you got to keep in mind that this is a big target from a big move, right? So in order for big moves to show themselves, it takes a long time, right? Another key example, right? Remember how long it took dollar for for it to finally give us this, right? After so long, even though we were bearish, right? So acknowledge time, acknowledge distance, and be realistic, right? Anyways, back to here. As you guys can see, right, we've pretty much already caught this entire sell-off, right? And this is pretty much the preliminary impulse. This is showing its hand in terms of an overall scale. But obviously, right, best case is that we do get any type of premium and then come lower. But honestly, in my opinion, it may not be that realistic, and I'll explain to you why. First thing I'm noticing, right, is actually, let me put this back, right? Just gonna leave that there. Realistically, looking at POIs in terms of overall scale, it would be up here, right, here, and here, right? Because, right, I'm noticing order flow, order flow, order flow, order flow. I'm noticing the character that's shown there, right? And immediately after the order flow, you see the change of character. You then see more order flow, and then you see the impulse, impulse, impulse. Okay, so the reason why I don't expect this so much is just looking at just a distribution schematic, thinking logic, thinking theory, right? I could be completely wrong, right? Keep in mind that. But for the most part, you don't get deep retracements, right? Because of what has already happened. It's about building the case, right? What has already happened? We have a range, we have a liquidity grab, right? And then we have the release, right? But we've already built up volume, we've taken out liquidity, we've charged with that liquidity, and we've now, began that, that come down, the move to the downside, whatever you want to say, the bearish move, whatever, right? It's basically coming down now. So the only reason why I don't expect deep retracement is because the transition from up to down has already occurred. The transition being here, and then pretty much that's the point of phase A through C, is for the conversion. So best case scenario, right, if we can take out liquidity, charge up, POI or POI, and then we create a new impulse to the downside, right? So technically, any type of bullish scenario is counter trend, but this is my swing time frame. These are major intraday moves. These are potentially high RR moves, right? So even though they're not considered trend, they're not considered favoring trend, I'm sorry, right? It does not mean that they are not worth your time, right? And for the most part, I don't really like counter trend moves, only if they are clear, right? And this one was clear, right? Because now we can zoom into our right. We have the final major low here, major pullback, right? Potential liquidity grab based on this preliminary high, but then that also gave another liquidity grab, which gave you the move to the downside. So this is my major, my swing leg here, right? So now we can actually zoom into our major intraday. What is happening in our major intraday? Right? This is now when we can consider, right, this to be our initial leg that took out structure, right? And even though this is seen as a break of structure, I would consider that more so a minor intraday, because this is our full leg, because this is the high that took out this low, right? And even though, right, even though this did come back and it created a potential liquidity grab based on here, I see this liquidity grab, or this BOS here, as a solidification of high and low. So the beginning of the retracement. So what happened, right? We now have another liquidity grab. And as you can see, we even mitigated there. And then that generated the move to the downside. So this is now your new structural range. What happened after that? Look at momentum, right? 1 and then 2, right? Which one is faster? Obviously here. So momentum is to the upside, okay? Momentum is to the upside, right? So now, realistically, right, based on this time frame, you see a turbulence point, interruption in price before we continue, and that's what led to the break of structure, right? And that is why price naturally came back here. You can even see in that wick there, right? But this is not what I care about, right? Because inside of our minor intraday, right, keep in mind we are bullish, right? The sentiment has now changed because of the momentum. So I'm not thinking bearish, right? So I don't see this as a bearish BOS. I see it as a bullish continuation BOS that starts the pullback. But the reason why this mitigation here I don't care for it, is because this is picking a low based on minor intraday. High, low, high, low. It's considered picking a low, right? So we're inside of this structural range here, right? But there's a reason why I don't teach you guys complex pullbacks. And this is a great example why, right? A complex pullback means that this is not invalidated. This structure direction is not invalidated until this is broken, but that is incorrect. Why? Because we understand order flow, okay? So order flow, right? I am seeing, right, this preliminary, this, this reversal pattern here, reversal pattern, right, which actually generates a BOS, which leads to potentially maybe a liquidity grab, right? But either way, this is significant to me because this solidifies a high because we took out a preliminary level of structure. So this is now the pullback for high, low, retracement, okay? So naturally, our structural invalidation is here, right? So right, what happened here in terms of now, or you could even call this again minor intraday, just another POV of it. So anyways, right, in terms of order flow, naturally we would want, right, that to not be broken. That would be considered maybe a disruption, right, or a liquidity grab, which is exactly what it did because it took the liquidity of the order flow and then gave you the preliminary level of structure, causing the liquidity grab. And this is actually something that I've seen very commonly in EG over the past couple of months. Hence why I like to be super conservative with entries, and hence why you're going to see why I took this entry. But anyways, right, this liquidity grab generated the new structural low, right? But the issue is, right, I'm now looking at structure high, low, right? High, that came to mitigate, right? And we now came to an unwillingness, right? That means, right, the unwillingness, right here, right, came to mitigate, unwillingness. You can even see the shift in order flow there. You can see the shift here, this wick high taken out and then mitigated to the wick of this M5 potential mitigation from here. So this is bullish order flow. Bullish order flow causes disruption, right? Mitigated point was taken out, causes disruption, right? Preliminary disruption, right? This is, shout out to Falco. He actually gave this a name, which is internal disruption, right? And where this, right, whether this was a mitigation, right? And I think there was a mitigation here. Right, mitigation, and that was also taken out, right? So this would now be seen as external disruption, right? So I personally love the external disruption because it invalidates one direction, and it usually gives you enough of a pullback to then give you a move to the opposite direction, right? And that's just because I guess you could say that it's inducing a bearish movement, a bearish bias, even though, right, technically this is still bearish, right? This is now creating inducement to the downside. It's, you know, pretty much giving a fake out per se, right? But because we understand disruption, we understand order flow, that now, right, generates a potential bias, right? So notice here, notice this order flow, order flow, order flow, order flow, impulse, right? So this is one set of character. This is another set of character, right? And I'm always referencing character. Well, not always, but I like to now characterize it as character, right? And where am I deriving that from, right? Our foundation is Wyckoff. So where am I deriving that, right, from? So this is actually change of character. So change of character is not something I've pretty much studied, right? But a change of character to me is, for example, here, order flow, order flow, order flow, order flow, impulse. So there's two different characters inside of this leg, okay? So I'm now looking for this, not only because it's in a discount, but because this order flow generated the impulse. So naturally we have to come back to mitigate something. And if it comes to mitigate it, then it naturally will not come back and you get a perfect entry, right? So that's all I'm doing is building a case, right? Building a case. Right, so back to M15, right? What do I see? One, two mitigation, three mitigation, strong order flow here. 1, 2, 3, strong order flow. Right, so yeah, that was change of character. That's where I derived the word character from. Okay, anyways, right, M15 POI can even be brought down to another POI. There's now two POIs inside of here, right? Obviously, the lower the better. Buy lower, sell higher, right? You even see that POI there. So actually, my trade was here, and I had I like my 2 pip stop, as you guys know, right? Primary target, I mean, not primary, initial target, already 10-1, right? And as you can see, right now, bearish order flow is wanting to come into play, right? Keep in mind, remember, this is still considered a type of inducement of wanting you to go in one direction, but it's going to go the other. And as you can see, we even came back to mitigate, right? Mitigated once, twice, 3 times, weak order flow. Therefore, it's unsustainable. So as you can see, structure here, lower high, right? Impulse, lower high, impulse, equal low maybe, liquidity grab, right? Then liquidity grab there, another lower high, right? So you could see the construction of this volume of this order flow being created to generate bullish movement, right? Okay, so this, because we now take this out again, it's another disruption, right? So all these disruptions are giving me more confidence into the case that I've built of this bullish run, right? So now that we've taken this out and we've now even created a major break of structure, right? Naturally, I want to take out the major high, right? And the reason why I'm aiming for this major high, right, is keep in mind, right, we're still maybe there's a potential that there is a turbulence, that this is a turbulence point and there's something here, or there's something still in that wick, whereas this would be liquidity, this would be liquidity, right? So I'm gonna take a big piece of my position around here because this could reverse on me at any time because we are still overall bearish, right? So let's see. Back to the position. Right, next target already at 24-1. Next target being a 47-1, as you can see. Right, so here's the thing now, right? We discussed this on the Zoom, which is on April 24th. Right, here is one issue, right? It was 2 p.m. on Friday, right? 2 hours for me before market closes. I see this wick that took liquidity and that generated a POI, and it was generating a reaction, right? And I have had one time where this reversed on me from a POI like this. So, you know, pretty much a type of PTSD that had me alerting here, per se. But anyways, right, we touched the POI, we touched it again. That's considered weak order flow. But I need to think here. Right, we are 2 pips from the POI, right? And it was actually 2 p.m. when I was doing this. 2 p.m. Right, so I am 5 pips away from my target. And my invalidation is here. Right, pretty much the final unmitigated point there. All right, so thinking risk to reward, 5 pips for 15 pips. Right? So should I just take my partial now, or should I try to risk it and wait for those 5 pips, or risk losing these 15 pips because this would be the invalidation of my bias, and this would now be seen as a mitigation, a potential unwillingness, and my whole trade can go to shit. So my potential losses outweigh the potential winners, right? So in my opinion, it's good to just let it be. Not let it be, but take my partial here. Don't be greedy, right? Every time I get fucked over, it's because I'm greedy. And I'm pretty sure most of you can relate to that, right? And not just in trading, in life. Like the simple things in life. Like, for example, right there, I'm trying to get into a lane. I'm driving, I'm trying to get into a lane, right? And I see like there's like a line of 15 cars on the exit. Right now, I see midway through that line, I see a gap, and I could take that gap, right? But no, it's like, no, my greedy self wants to go farther, right? And I want to make sure that I get in at the exit at the most, you know, at the perfect time to where I can get the best position, right? And that is greedy, right? Where I could have just taken it safe and I could have just gotten in halfway through the lane, right? Whereas now I'm now trying to force myself into, trying to get myself into, the front of the line, right? And get into that exit and then reach my destination. But I'm now risking an accident. I'm now risking more road rage, right? And I'm risking almost nothing if I take the conservative exit, the conservative, spot in line, which would have been the gap in the middle of the line. So you see what I mean? Principally, it makes sense to just take my partial, right? Because it's not worth the risk, right? RR, it's not worth the risk. So I take my partial there, and market close right around there. Will it still hit this target? Honest, 98% sure, yes, it will probably hit the target, but there's obviously a chance that it can gap down and give you unwillingness and then go the wrong way. So it's not worth it. So yeah, basically this, in my opinion, reached the target that I wanted, and I built not an excellent case, but I built a very rational case, and that's what matters to me in the long run. I could have made this stop loss. I could have made this stop loss easily. Put it there, that would have been 1.4 pips. Now look how my RR is, right? Do not be deceived. This is what you see on social media. Do not be deceived, right? I'd rather have that extra those extra couple pips, right? Those extra pipettes of SL to make sure that I win the trade, right? You want to win the trade. You don't just want to be pretty with the trade, right? Do not be deceived. Do not be deceived. RR is deceiving. It's why I don't like to preach it. I don't like to flex it. It doesn't make sense. You know, it's irrational, right? Because it's a marketing tactic, okay? So anyways, you guys, that doesn't really matter to you guys. But anyways, with that being said, I think I can end off this pair breakdown here. I hope you guys enjoy, and I'll see you guys in the next one.